Crypto markets couldn't escape the Omicron sell-off, but on-chain metrics remain constructive, showing leverage looks balanced. Technicals suggest a major crash risk below 53K in Bitcoin, and put skew remains bid as protection buyers come in. Meanwhile, Ethereum looks to break to the upside as the ETH Bitcoin spread takes out a technical level. All this and more in this week's Crypto Insight. All right, so crypto this week, guys. What's been going on? Obviously, the biggest news story has been Omicron, the variant that rocked markets, the Thanksgiving massacre, as it was. Crypto markets couldn't really escape that risk-off sentiment that kind of gripped all asset classes. We had been consolidating, obviously, in that range between 54 and 58,000 that we've kind of shown. And we were kind of hopeful that consolidation was pretty much done and we could start our next leg higher towards 80,000, which would be a nice completion of this 5-wave structure that we were identifying, right, as our wave count. Problem is, this fourth wave has kind of extended itself a bit, right, by that in terms of time and in terms of how far it got down. So we did manage to bottom out, around 5,300, very close to 53,000, sorry. And that is a very, very key level in terms of the technicals, because if we get below that, then this wave count that I've got here of a 1, 2, 3, 4, 5 that isn't complete yet, that wave one becomes negated, because, or what becomes negated is that this correction is a fourth wave because it can't overlap with that wave one. So Elliott wave has got certain rules and guidelines that you have to follow when you're labeling these waves. And the idea is that if Bitcoin breaks 53,000 to the downside, then you're overlapping with wave one, which basically means that this move down is not a wave four and could be something else. And arguably this whole move could go as low as, anywhere between 40K and 30K in some much larger degree correction that, we're going to have to relabel basically, right? So that's the idea, right? The scenario can change quite considerably if 53K breaks, right? So that's something to be aware of in terms of the charts and what the technicians are going to be looking at, right? So I think 53K is a very, very key level, which if broken has got a potential for a lot of acceleration to the downside because of the setup, the Elliott wave setup, basically. And I also think that, and we'll talk about the on-chain stuff, but I also think a lot of people will be using 50K as a bit of a stop in longs that they've got into. And if we break 50K, then I think all hell breaks loose in crypto, basically, in a very short amount of time. Longer term, I'm sure we'll be okay, but just in terms of short-term trading, right? Okay, so that's kind of what the technical setup is on crypto. Now, right now, we're parked up at the top of this bit, 58. So if we can get our head back above 58 and maybe even above 60, then maybe that is the fourth wave done and we can get to 80K, right? But I just feel like right now, we're not out of the woods yet on this COVID variant. We'll probably need a week or two still of news flow on that. I'm not buying into the idea that Bitcoin is just going to rally straight out of this, basically, with no issues, right? Now, if you look at Ethereum, on the other hand, that's trading very strong, right? I mean, that's recovering very, very strongly. I mean, it's not looking the same as Bitcoin at all, right? It didn't get as deep down in its correction in terms of these key levels. It didn't get to like 36.5, which is the level I would have thought it would get to if Bitcoin got to 54. So it held, which is pretty bullish for ETH. And then if you look at the breakout or almost breakout, we're pretty much there at 0.08, right, in the spread, which is this key level to watch for the Ethereum breakout, right? So if this thing really breaks out, I mean, we've got a lot of potential outperformance on ETH, right? So ETH is in kind of stealth outperformance mode, even though Bitcoin's trading heavy right now, and that's got the potential to do some decent stuff on the upside in ETH, basically, right? And we're starting to see some bullish trades on ETH come up on the back of that as well, which I'll mention when I talk about the flows. Now, if we look at the on-chain metrics, this is still a mild correction in Bitcoin terms, roughly 20% from the high. If you look back at previous corrections over the course of this year, they've got much deeper than that. So you just got to factor that into the idea that Bitcoin vol is such that a 20% move down isn't something to necessarily be spooked of. Bitcoin futures open interest is still pretty high. And that's increased a lot since September. But a large part of that is due to the CME open interest increasing, right? Which we know is on the back of the Bitcoin futures ETF. So rather than Bitcoin futures open interest being a sign of too much leverage, really the better measure of leverage is the funding rates, right? Because a lot of the futures, there'll be people in there doing the arb trade between Bitcoin spot and Bitcoin futures that will increase futures open interest. Obviously the ETF, people will put money into that, but they won't be just speculating. They'll be parked in there for a while. So really, if we look at the funding rates, we see that funding rates have kind of drifted back down and they're quite low, right? So that signals that even though the futures open interest is high, the leverage and speculation on the long side isn't necessarily too high, right? So the risk of a big crash is arguably not that high, right? So that kind of counteracts the argument I'm saying about if we broke 53, there'd be a bit of a panic. Well, there's maybe not too much leverage out there that needs to panic. That's what this is suggesting, okay? Now, in terms of that level 53, another quite interesting on-chain metric is this one, which is the short-term holder kind of cost basis, right? So this is showing the profit and loss ratio that short-term holders have got. So that's kind of come back down to 1, which is like the break-even point, basically, right? And it's bounced off that level. So the idea being that 53, 54K area is kind of where what they call the short-term holders have kind of got in. And so they're not puking it. They're not panicking yet. And at that level, we actually found some support. Now, if we break that level, arguably those short-term holders are going to cut their risk and run, right? So there could be a bit of an acceleration through that level on the downside, just like we see, markets bouncing off the vol trigger and stuff like that. I think similar story, right? You either bounce off the level because people are happy to, add at that cost basis or whatever, or we break that level and people bail because they are just in for the short-term move and they get out, basically, right? So that could provide a catalyst for a sell-off through that level. So I think 53K is going to be pretty key. Yeah. And then the last chart on the on-chain really is just long-term holders don't really seem that bothered or phased, right? And that's no real surprise, right? Long-term, nothing that we've seen so far would really change the long-term view right now on Bitcoin, right? You would need to see a violent move to 40K and, some more information, some more news flow to then decide, to expect long-term holders to get nervous. But right now, they're not doing much. There was a little bit of a pullback in long-term holders into the rally, but we're not seeing some crazy kind of get me out type action, massive rush for the exit out of long-term holders. Okay. All right, let's have a look at the vol analysis now, right? You've got the volatility cone showing you that, across all time frames, realized vol is still, less than the median level. Okay. So basically saying that, this realized isn't anything to be overly concerned about. Okay. Now, implied realized spreads, if you look at the right-hand chart, though, they have come in a little bit, right? So they've over the last couple of weeks, they have been tightening pretty much from both sides, right? The pink line is the implied vol that's been creeping lower in the short dates. That's the kind of 2 to 4 week region, whereas the realized has kind of been creeping higher, obviously, as we've been seeing a bit more choppiness in the market, right? So bit of a convergence there between that. I mean, that spread had got really, really wide, to as wide as like 30 vols or something. It's tightened up quite a lot now. See this? So really the demand seems to have come for the year-end stuff, okay? And so on the right-hand chart, you can see like the 30-day expiry has kind of slightly crept higher compared to a week ago. And then everything else in the curve is kind of bent lower, basically. So the long ends come off a little bit, nothing crazy, and the front ends come off a little bit as well, right? But the point of the curve that people kind of want to own optionality seems to be that December area, basically, which is, a really big expiry in crypto this time around. The chart on the left kind of shows you each individual sort of rolling expiry and kind of what it did last week, and you can see on the 26th, when all these curves kind of converge and go together, bunch together, that's basically the term structure flattening. And then when they disperse back out again, that's the term structure steepening back. So you see the pink line is like that real front end 1 week stuff. That spiked dramatically where the whole curve just kind of converged to a much more flat curve. It came back down. Then over the weekend, it spiked against that 1 week stuff as we retested those lows. And now as we bounced again, that 1 week stuff's collapsed back down again. And the curve has kind of steepened out again, right? So there's a couple of different ways you can look at the term structure in terms of graphically, where you can you can see what it did through time on that chart, or you can just see the snapshot of what it is now versus a particular point in time, right? If we look at skew, so skew's obviously, unsurprisingly been shifting towards the put side. And obviously the way it works in crypto, because the implied vol is so high and everyone's generally quite bullish, when people get spooked and they need protection, they don't go and buy a load of longer dated protection. They buy very, very short-term protection because otherwise they're paying a lot of premium for like longer dated protection. Okay. So they rush to like the 1 week puts, and that's why the 1 week puts, go pretty dramatic, right? And they go as they got as far as, nearly 15 vols for the puts over. That's where that pink line got to. But if you see like the other maturities, right, we've got 30-day, 60-day, 90-day, and 180-day. The other maturities, whereas the 30-day reacted a bit, the other maturities kind of didn't really care that much, right? So what is interesting there is that the 2 month, 3 month, and 6 month skews, whilst they've moved a little bit towards puts, they haven't really exploded, okay? And for me, that's a bit of an inefficiency in the market because, and if we look at the right side, I've kind of zoomed in on January skew there, and you can see in the January skew, if we compare the blue to the pink is now the blue as a week ago. The pink, it shows that the call skew has collapsed a bit, right? You can see that clearly calls are cheaper now on a relative basis, that gap between calls a week ago and calls now is quite wide, whereas puts haven't really moved that much. So the move in skew is just calls becoming cheaper. It's not necessarily puts going up dramatically, right? Puts are actually on a lower vol than they were a week ago, right? So put skew hasn't really reacted to the move in the market. And that's where I think there's a bit of an inefficiency, right? Because if the market crashes below 50K, the whole dynamic in crypto is going to change, right? There's going to be a load of people who are going to puke, the short-term holders. And it's probably because the game's changing a bit on the COVID front and we're going into a bit of a nightmare scenario. And you know what crypto's like, right? Crypto can do 20% intraday. So I just don't think that downside skew is accurately reflecting the risk in this market. And so for me, the opportunity exists to kind of sell this region here of 50K and buy multiples of the 40K strike. And you do it out to 2 months because you're not doing it as a break-even play. You're doing it as a vol play. What you're saying is the market's either going to hold these levels and rally again, and within the next month into December expiry, we're back in bull scenario, and this just turns out to be a head fake. And then my position kind of doesn't do anything because it's a zero premium type trade, right? Or we break 50K, accelerate down to 40K quite quickly based on the technical setup. And do you think the implied vol of the January options down at 40K, do you think it's going to be priced at 90 vol? I will buy as many as you want at that price, right? That's going to be 120 vol probably, right? So that's where I believe that the skew in the market is not correctly priced to reflect that risk. And that is a way for me to get crash protection in the book, as subscribers will know, is a trade that I've done. And it's not made me any money yet. It doesn't need to make me money. It's a crash protection trade, just in case, to protect my overall holdings in Bitcoin. I actually want it to not do anything, right? The scenario where it makes me a load of money is a scenario where my net Bitcoin position isn't doing very well. So it's protection, but I think it's the most efficient and, cheapest type of protection that you can buy. We don't have to take a big delta view, buy a load of puts outright. You don't have to do a risk reversal where you sell a load of calls and buy a load of puts after the market's already had a 20% correction. This is something where you get to own some explosive volatility in the event that the market accelerates to the downside, which you will hopefully then be able to monetize because that vol will spike. Now, it's the type of trade where you'll have to be quick to monetize it because we know vol spikes don't tend to last very long, right? And crypto is no different. And you can just see that from the charts that I've shown today. But it's just those type of structures, I think, offer you some quite good value, basically. Yeah. And then sort of the last thing to look at is flows, right? And really the most interesting flow in the interest of keeping it short and sweet is Ethereum. So whereas you had balanced flows, you had some hedging flows in Bitcoin via risk reversals, short dated put buying, that type of thing. This was you can see here, the biggest block on Paradigm, and you've got a big call bias, 74% calls versus 25% puts. The big blocks are December, and it's the 5,000, 6,000 strikes. And this was actually a call ratio. So this was someone buying the 5,000 calls and selling 2 of the 6,000 as a way to be long ETH into year end, given that now the chances are it's going to be hard to break much above that 6K level if you think the game has changed a bit, right? So if you're a little bit less bullish than you were, but you're still bullish on ETH and you think it outperforms, that's the type of trade that kind of makes sense in an elevated vol environment. And we know that ETH vol is quite expensive, right? It's still above 100 or whatever, right? Or around 100. So that's the trade that someone did in a decent size, in like 10 by 20,000, right? Which is not to be sneezed at. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.